Tech is in full no man's land mode. Markets are sideways, but actually underneath the hood, AI partnerships and power wars are hitting up big time. The real fireworks is Apple's massive Gemini deal with Google powering the next Siri upgrade. Siri's sticking around, it's just going to get a lot smarter. Plus, diversification challenging Nvidia's throne. So let's dive in company by company, starting with Microsoft and see who's winning the AI arms race. However, first, before we do anything, per usual, let's start with the overall global market. The market overall is actually struggling a little bit. Yes, we are near all-time highs in the cash index and the SPX here, but as you're going to see, tech is still lagging. That was my main point last week. If tech doesn't move, the market's not going to move, especially with it being 34% or so of the general market. So you can see we're just kind of dicing around. We're holding near all-time highs, but we're not really going anywhere. RSP equally weighted. This looks absolutely great. Honestly, I'm not 100% sure why, but the overall market without the general heavy weights of the top 10 names, it's moving rather well. If we go to the cash index, this is the Nasdaq 100. It's not doing anything. It's just kind of wedging into this ascending triangle here. It's having a hard time breaking this 2550 area. Let's just say 2900, 25,850 area. It just continues to tap it and get rejected. Typically, you would say, hey, the more times a level is touched, the more likely it is going to break. However, it's having a very hard time breaking this level. So we have a little trend line. We're making higher highs, higher lows, not necessarily higher highs just yet. Equally weighted Qs, it's not doing anything, chopping. No need to waste our time here. The Dow looks pretty decent. It's holding the short-term trend lines. Everything is up. It's just in this 2-week or so consolidation. I'd watch a break of 496 and away we go. IWM, it's pretty interesting. So I was watching a video by Shadow Trader this weekend. He makes a decent argument that the fact that these are actually moving could potentially be a bad sign. Typically, at the end of a bull run, the quote unquote trash gets a nice push, and that's what these are. This is what's happening. And so we have some stagnant price action for the S&P 500 and the Nasdaq, and these Russell 2000 company names that most of the time don't make any money are absolutely ripping. So I think he has a good point here. And this is just the cash index there. All right. So I reorganize these. We're going to change it up. This is by the weight of the market, these sectors here. So XLK, heaviest weight, just like I just said. 34.4% of the S&P, Nvidia, Apple, Microsoft, those are the top 3 names. You can see it's literally not doing anything. It's just chopping sideways. Whether it's a good or bad thing, I don't know. We'll find out, but it's a no. You can't trade this. You literally can't trade this. So these names mostly make this move. It's not going anywhere. That's the point. Financials, we had a breakout. Now it's to the retest area. It's now under the short-term MAs. We have an 8 and 21 pinch. If you pay attention to that, we have some topping tails at that short-term MAs. We undercut the 50 and kind of rally back over it. But overall, there still looks like there's some overhead pressure here. And this breakout has the potential to actually fail and then accept back into this range. I wouldn't be shocked if we tagged this 200 MA there. So financials, nothing special to talk about. XLC, 10% of the S&P. Meta, Google, and these top 3 names. I just keep Netflix in here because I trade Netflix. It is now breaking this consolidation area on pretty decent volume on Thursday, and then Friday we have some continuation closing at the lows. Why? It's not because of Google, because Google looks great. It's because of Meta. Meta is getting hit, and the other communication. Netflix is getting hit. You'll see these in a second. It's not ideal at all. XLY, 10%, 10.3% of the S&P. Amazon, Tesla, and Home Depot. Amazon is just kind of chopping around, not really doing much. It looks like it's setting up, but it doesn't have any juice to it. Tesla's not going anywhere fast, anytime fast. And then Home Depot actually, Let's look at that real quick. Yeah, that looks pretty decent. So Amazon and Home Depot is actually probably propping this thing up. Tesla's not helping very much. Let's go to healthcare. 9.8% of the S&P 500. Eli Lilly, Johnson & Johnson, AbbVie. Top three names. These names are the ones that move this. So if these go up, this goes up. If these go down, this goes down. If these mix and chop around, this mixes and chopping around. Okay. Holding short term, actually, no, it's not even holding short term MAs anymore. It's at a potential support area, basically at this 156. However, I wouldn't be shocked if we hit this 50 EMA, maybe even came back and retested this. So XLY isn't even looking that good. XLI has absolutely ripped 8% of the S&P 500. We have GE Aerospace, Caterpillar, and RTX Corporation. Those three are the heaviest weights within this. This is breaking out and it's moving. It looks good. However, it is extended, which is why I think next week we're actually going to get some selling and probably a little bit of a pullback. Why? Because SPY's not doing anything. The Qs are not doing anything. Tech is struggling. Financials are getting hit, so that's going to pull down. XLC looks like it's going to pull down. XLY, maybe it stays and chops around, but if that fails, that'll pull the market down. XLV, this looks like it's going down, so that'll probably pull the market down. XLI, it's extended. You don't buy up here. If you're buying up here, you're doing it wrong, in my opinion. So this is in need of a pullback, a short-term price or time correction. Let's look at XLP. This is also absolutely ripped, 4.9%, making up the S&P 500. Walmart, Costco, and Procter and Gamble. You don't buy up here. This is extended. You missed the trade already if you trade this. So this needs a little bit of a correction. XLE Energy looks pretty decent. If we zoom out on the weekly, we're coming up to this. Actually, it already hit the prior supply area, which is good. But this looks like it could continue into next week, but it only makes up 2.8% of the S&P 500. So it doesn't have a huge weight to it. Utilities, chopping around, not really doing much, only makes up 2.4% of the S&P 500. XLB looks decent, but it only makes up 1.7% of the S&P 500. So my point is, if the names are up, they look like they're in need of a pullback. And the names that actually move the markets, the heavier ones, they're looking down, actually. They're not looking the strongest. So we might be in for a rough quarter one, which I listen to Babyfish a lot. He's got a YouTube channel. He's also on X. I'd go check him out. He's been saying it's most likely going to be a rough quarter one as it is, and he has a good potential of being correct. Let's look at Bitcoin. Bitcoin's actually looking pretty decent. This is just the ETF of Bitcoin. Let's look at actual Bitcoin. This 95,000 area was pretty important to hold, I would say. We kind of busted through it on volume if you pay attention to that. Now we have a nice little pullback. We are above the anchored value. I'm going to take that away. I don't care about that. We're above the short-term moving averages. We're back above the 50. We're above the anchor VWAP from this low. We're coming up to the 200 EMA, so I would not be shocked if we hit it and get some supply. Overall, it looks pretty decent. However, there's still a chance it can get up here, find all of this supply that's up here, that's up above it. So these people are quote unquote trapped or waiting for an opportunity to break even or get out and push price back down. So we have some supplying demand potentially in this area, dynamics, supply and demand dynamics in this area. So we'll see what happens. XBI not doing anything. SMH continues to be the darling of the market. It's not because of Nvidia, you'll see. It's not because of OPCO. Why? It's because TSM had earnings later on Thursday last week, gapped up, indecision doji, and did really, it gapped up here, failed to go higher and closed near its low. So we don't really have any real buyers here just yet. I'd wait 3 or 4 days for this to kind of make a choice, make a decision. But that's why SMH is up. It continues to, help the market. Gold looking pretty good, chopping around its all-time highs. Gold miners, same thing, looks pretty good. Silver looks pretty good. Potential moving on up, but overall, this is pretty parabolic. There's a couple arguments to this, but that kind of goes beyond the scope of this video. but mostly precious metals are a potential long-term game, specifically with data center buildouts, AI, and tech overall. So we'll see what actually happens with this. Just this is very hard to actually manage your risk properly here. And then copper. Copper broke out of this little consolidation. It has done nothing but trending. But the point is, actually, let's look at the weekly. Zoom all the way out to its inception, and there is a huge base basically from 2010 that this broke out of, and it's done nothing but rip since. There's a few weeks tight here. Our signal was on this bar right here, this breakout bar, and we get some continuation. I missed it, but I'm going to start watching this and tracking this. All right, let's get to the heavyweights, right? So firstly, Microsoft. There could be a potential reason why Microsoft looks absolutely terrible right now. Firstly, let's go technical analysis route. We have a double top here, broke this, chopped around, and now it's breaking below this consolidation. Short-term EMAs are going down, 50 EMA is going down, 200 EMA is flat. We have a potential death cross, quote unquote, death cross coming up with this 50 crossing the 200, okay? So this doesn't look good. I do think this gap at 424.90, that is a target for me. It doesn't really have, I don't know, maybe this 450 first little bounce and then consolidation or something, but really ultimately 425, even maybe this 396.66 gap fill is coming up. But some news on potentially why. So they are initiating a new community first AI infrastructure initiative. So it's basically committing to be responsible data center builds, focusing on being like a quote unquote good neighbor amid the power and water concerns for these data centers being built. So I also read that they're not going to take any tax incentives any longer, and then they're also going to pay out for these data center builds and then also for the electricity. And there's also other ways that this can work out for the standard American and for us not to get hit. So that's a potential why this looks that way, because it's less revenue. If they're not going to take tax dollars anymore, and they're going to spend a lot of money on these data centers and things like that, that's less revenue out of their pocketbook. So they're just going to lose. It was kind of a similar idea prior that I talked about with Meta a few weeks ago. Nvidia doesn't look good. Honestly, it's not doing anything. It's chopping around. Yes, it's still the king of AI and whatnot, or the chips, but really gapped up here, sold off, and it gapped up. It made that. It broke the high of Thursday and then closed at its lows. That's not what a strong name does. That's not what real demand does. It's still holding the anchor VWAP, but overall, it doesn't look the best. I took a trade on, I think it was Monday. Put my stop loss, yeah, because I liked the undercut and then it rallied. But 2 days later I got stopped out. That was my low here. So last week I said, hey, I'm not interested in Nvidia, and then I went back on what I said and I paid for it. So just bonehead mistake on me here. Also, there was news that OpenAI, they are looking into other companies. I think it was Cerebras that was looking at like new chips that they're not thick and they're all connected, so there's less like travel speed and makes them super efficient or something like that. It's a privately owned company. So Nvidia does have competition, and OpenAI was looking into it. Here is the big news of the week. So Apple, it dropped a bombshell multi-year deal with Google's Gemini models. So it's powering the overhaul. It's going to be a more personalized Siri that's going to roll out later on in 2026. Likely in iOS 26.4 coming out in like March or April sometime. So Siri is going to stay Siri. There's no rebranding. It's just a massive upgrade in reasoning and context and natural convos. So that's pretty big, and it kind of gives Google's and AI the lead, and it pushes Alphabet to a $4 trillion plus market cap. It's going to become integrated into Apple's ecosystem, and it kind of gives Google the hey, we're serious about this, and they have a potential leader. So they're probably going to be the last one standing out of all of these names, because as you can see, Apple, it doesn't look good. You can argue that this is a head and shoulders pattern. There's neckline, it broke. We get a little bounce to the short-term 8 EMA. I still think we have this gap fill to 25.38. It's really not that far, so that we probably get that this week. I wouldn't be shocked if we came down here to tag the 200 EMA at 245. So I would not trade long right now. Let's move on to Amazon. Amazon is looking okay. It's not really doing anything. It had a nice push, gave a little back. It's over the 20 EMA. It's over these prior highs here. But overall, it doesn't have any juice to it. Why doesn't it have any juice to it? Because this overall market doesn't have any juice to it. So it's not really doing anything. Obgo, look at Broadcom. I would call it that. This gap continues to support it, but overall, it's shopping sideways. It's a waste of time. Don't go there. Meta, this now looks like a short again. It's under the anchored VWAP from the lows. It's under the 8 and 21 EMAs. We have the 821 pinch here. And I think we go and test this 580 level here on Meta. So it doesn't look good. Maybe we find some support here. Heck, I don't know. Even in time, depending on what happens, maybe we even get this gap filled down here to 549. That's ways down, but I will be looking for short positions. I am short Netflix. We do have earnings on Tuesday, so don't forget that Tuesday PM that is. So I will be out by then. But look at Netflix. This stock is dead. It's not doing anything. It's getting sold off. It's a beautiful trend down the 8 EMA. I took a trade end of last week for a small win. Of course, is literally the next day after I got stopped out, it goes. But nature of the beast. But I am short from Friday. I'm looking for a gap down on Tuesday because we are closed Monday to get out in, and we'll see what happens. Tesla's not going anywhere anytime soon. It just continues to chop around in a range, right? Higher low here, but will that hold? This kind of looks like it's a flag, but really it's underneath the short-term EMAs and it's underneath the 50. So it just consolidating here. Again, I wouldn't be shocked if the 200 EMA is tagged. Here's Google. It looks great. Like if you want to take long trades, this is what you need to look for. It's above the short-term EMAs. It's above the anchor VWAP. All the 50 and the 200 EMA, they're pointing up upwards. It looks good. Just the thing is I'm not interested in longing anything right now. I don't think this is the easier trade because the overall market is heavy and overall tech is heavy. So it's just not the best in my opinion. Like it looks good. If you're a long-term holder, I would not financial advice. I would continue to hold it, but I'm just not looking for longs. CrowdStrike's rounding top, little bounce here, a little H pattern, whatever you want to call it. We got the gap fill that I've been calling for the past few weeks now. Honestly, it's spending time underneath the 200 EMA. We might get the $400 tag. ServiceNow doesn't look good. Target was this 136 low or so. We met that target and now we're going even lower. We hit this prior support area. If that falls apart, heck, I don't know. Maybe we even go down to 106. That'd be pretty wild. But this is extended here. This is not where you want to be shorting this. You're going to get caught short. But any rips, I think, are shortable to the 8 or the 21 EMA. Doesn't look good. Palantir, chopping around. This is not a good look at all either. Consolidation broke those lows. It's just in this range. I wouldn't be shocked if we also hit the 200 EMA on here. And then same thing with Hood. This wedge pattern here, it broke lower. I wouldn't be shocked if we hit the 200 EMA here. So overall, these names that we just looked at, just quick little scan through again. Does that look good? No. Does that look good? No. Does that look good? No. Does Amazon look good? Meh. Does Avgo look good? Meh. Does Meta look good? No. Just go through these charts, and if you see them going down, short-term MAs going down, it doesn't look good. So I wouldn't be trying to catch a falling knife with these. There are better places to be, and cash is a position. So maybe sitting on your hands is a good idea as well. Let's go over earnings. We have, as I said, Netflix Tuesday after close. That's really it for all the heavyweights, I believe. Other than that, there are some other bigger names. GE's in there, Procter and Gamble's in there, INTC, Intel's in there, Capital One. If you're watching financials, that's in there. But there's that, and then we also have the PCE coming up on Thursday, the 22nd as well. All right, manage your risk, be safe, trade well, like, comment, subscribe, and trade well. And we'll see you next week. Bye.